Hello and welcome to another Dividend Dynamos video. We're discussing the Vanguard High Dividend Yield ETF known as VYM. Before we get started, please note that I am not a certified financial planner, and the content shared in this video is for informational and entertainment purposes only, and is not intended as financial advice. Passive income, derived from dividends, serves as a compelling reason to incorporate dividend stocks into your investment portfolio. Regardless of whether retirement is on the horizon or decades away, reinvesting quarterly payouts can bolster overall returns by accumulating more shares. As retirement approaches, transitioning dividends to cash directly in your portfolio becomes an appealing strategy. The optimal scenario involves owning a diversified array of dividend stocks poised to sustain and increase dividends over the long term. So let's explore why investing in VYM could be advantageous. Seeking Alpha gives VYM a dividend grade of A. The current trailing 12-month yield is 2.84%. The 5-year dividend growth rate is a nice 5.22%. VYM's top 10 holdings include JP Morgan Chase, Broadcom, Exxon, Home Depot, Procter & Gamble, Johnson & Johnson, Merck, AbbVie, Chevron, and Bank of America. A breakdown of the holdings shows financials make up 20%. Healthcare 13%, consumer defensive 12%, industrials 12%, technology 11%, and energy 10%. The rest consists of consumer cyclical, utilities, communications, basic materials, and real estate. And the dividend growth has trended upward for the past 10 years. ETFs function akin to mutual funds, assembling stocks based on specific characteristics but offer greater flexibility as they trade throughout the market day. The Vanguard High Dividend Yield ETF encompasses over 550 dividend-paying stocks, featuring top holdings such as Home Depot and Bank of America. Notably, the ETF's focus on dividends leads to underrepresentation in the technology sector, potentially dampening performance during tech-driven market rallies, but providing resilience during downturns. With expense ratios as low as 0.06%, VYM minimizes fees, allowing more investment capital to fuel growth. Offering an immediate yield of 2.81%, the passive income generated surpasses broader market alternatives like the Vanguard S&P 500 Index Fund, VOO, which yields around 1.3%. This fund's returns often diverge from those mirroring the wider market due to its emphasis on large dividend-paying stocks. While many funds track tech giants, VYM stands out by focusing on income-generating assets. So, how does VYM compare to other top dividend funds? Well, VYM has outperformed Schwab's U.S. Dividend Equity ETF, SCHD, in terms of capital appreciation over the past year. I am bullish on VYM because it allows investors to own a basket of income-producing securities with strong track records of dividend growth. There are many different income-focused ETFs and CEFs, and VYM is one of the cornerstones of my income-producing portfolio. I believe that VYM can continue higher throughout 2024 and deliver future annualized growth that will allow investors who are reinvesting the dividends to harness the powers of compounding. If you're looking for an income-focused ETF without an option overlay strategy, VYM has been solid over the past year. I like the Vanguard High Dividend Yield Index Fund for its modest valuation, diversification, strong yield, and positive momentum. There are promising trends developing for dividend-oriented investors. According to data provided by Wall Street Horizon, 27% of global companies that have provided updates on their dividend policies during the Q1 reporting period so far have increased their payouts. Just 8% have announced a dividend decrease. To maximize benefits, integrate VYM into a diversified portfolio alongside a few high-growth stocks. While key holdings like Procter & Gamble, Coca-Cola, or PepsiCo may not deliver dramatic annual earnings increases, they offer steady income growth that's crucial for sustained financial health. Many top holdings in VYM have a track record of increasing payouts for over 25 years, illustrating the stability and longevity of dividend income. Share price momentum has been improving in recent months, rising from a C+ ETF grade by seeking alpha to a solid B today. Why has VYM done so well just recently? Chalk it up to strength in large-cap bank stocks and other equities from the financial sector. That area is more than 1/5 of the allocation, while healthcare is the next largest sector at 13%. Information technology has taken a backseat to utilities and energy in the past month, and IT is merely 11% of VYM. Balancing VYM with growth-oriented ETFs like the Vanguard Growth ETF VUG or the Schwab ETF SCHG ensures a well-rounded investment strategy. And combining earnings growth with reliable dividend income can create sustained wealth accumulation over the long term. I'll be adding more VYM to my portfolio. You may want to give it a look too. Be sure to do your own research and talk with your financial advisor to determine if VYM would be a good fit for your portfolio. Be sure to like and subscribe and also leave a comment below. Thank you for watching. I'll look forward to seeing you again in our next video. And as always, keep your feet on the ground and keep reaching for the stars.